Good day, all. Ira Epstein of Linn Associates with your agriculture update for this wild, every day seems wild now, but it's summertime, it's wild trade in the ag markets, and boy, what an interesting day. First, beans made back everything they lost yesterday. The wheat market sort of quiet here. I actually am going to move that to now the Decembers. It's time to move on in a lot of these contracts. And in the D's corn, down another 16. Is this market going to the 350 level? It might be. Something to look at. A crash again in the live and the feeder cattle prices is that plant, that Tyson slaughterhouse in Kansas. I don't know if you realize that it does or did before the fire. 6% of the U.S. beef was slaughtered through that. 30,000 steers, cattle, a week. 5,000 a day. I mean, 6,000 a day. Those were their numbers, back and forth there. On the weekly chart, you can see that the market is just sort of stuck right here at the 18-week moving average of closes. Yesterday, I had drawn this downtrend line, and you went up today, finished the day at 889, literally right on that line if you look at it. But what is the market trying to do? Well, it's trying to lift itself here. You've got the pattern of higher lows, higher highs. We saw less acreage come in on the USDA planted acreage part of the market yesterday. It got pulled down with corn that went down 25 cents on today is Tuesday, Monday, and down 16 more cents today. So the two are breaking away from each other in a massive fashion, which makes all the sense. I don't know anyone that got the corn numbers right. It's that simple. Traders were thinking with fake news, I guess, that the floods and everything would get the farmers not planting another 5 to 8 million acres. Those farmers came out and they planted. And even with the planted acre numbers that we got that were not planted of nearly 12 million, it's not mattering. So you've got a market that's coming up. The 100-day average is here. It's time to forget about the USDA numbers and move back to the market. Until today's low is taken out, the market now has the trend up. The bias is up. You're in the first level of resistance at 898.5, the 100-day average of closes. Another level comes in way up here at 922, the upper Bollinger Band. Now, getting there will not be the easiest task. So this should be the battleground for a moment as I see it. But momentum is in good shape. It's just turned up. The bias is up. The trend is up. So on this chart, what I would not want to see is the low of today taken out anytime over the next Wednesday or Thursday, either of those days. Today's low in the market, as we can see, 875.5. I won't be surprised to see the trade trying to buy that market at that 18-day average of closes and try to defend it. In the meal market, we're starting to get today the first inkling that the meal oil part of the complex wants to reverse itself. The meal came up strong, up nearly $6. We have an outside day up. We have a pattern of a lower low and a higher high. It's not trending. We have momentum turning up in the market. So resistance, that line in the sand is likely to be the first zone, 306.40. If the market were to be able to accelerate dramatically, then you've got this 314.70 zone to consider. But I think it's going to be the trick to get through that. And the soybean oil gave you the big failure today. If we take a look, this market down 51 points. As in the spreads, they changed them today on you. Now, will they last another day and say that they're starting to really go that way? That's what we'll be looking at. But the upper Bollinger Band area has certainly done its job, and it's held the market. Pullbacks into the support area of 28.79 to 73, that could be your support zone. In the corn market, no. Going through the report was the danger. Now the market lets go yesterday and again today. So you've got gaps in these markets that are being left here. The market is just still feeding on itself as the long open interest caught, and they're trying to come out. In the wheat market, now this is the SEP wheat. I'm getting ready to now make the change for you. But lower low, higher high, not a trend and oversold. I'm glad to move to the December now. In the sugar market, in the ox sugar, you have the pattern of lower highs, lower lows. It is still bearish. The bear's job is to defend the 1185 area. We finished at 1172. If the market clears 1196, you can quickly reverse and find yourself with higher lows, higher highs over the 18-day average of closes, with momentum turning up at that point on you. So the bears' job is to defend this if they want to keep the market going that way. And their trick is going to be to try to get it under 1127. I say trick because typically in bearish plays, you're looking for lower lows and lower highs. Well, you have the lower high, but this is the last lower low. If you start moving up from here, you'll have higher lows and a lower high. And I'm assuming you didn't take out 1196. I think take out that 1196 and you could have a shift in the momentum of this market. In the coffee market, again, we've lost the embedded reading. I'll tell you something that I learned years ago. When you get to a point where you get a day where you lose the embedded reading, then it comes back and embeds, and then right after that it gets lost again, it's telling me a story. And I've learned this over the years. It's telling me that momentum is waning. Not sure why the market did its thing yesterday down there, but this break back, this pull up, I think this is a sign that the bears are probably going to move to the sideline. I'm not saying they will. I'm telling you what I think over the years. I admit one thing we did get today. If you look at this 18-day average, yesterday it was getting close to getting under the 100. Here you are under it. You could say that it happened when the lowest low of this move was taking place. This scares me. Slow stochastics to me are the most powerful tool on this chart, on most charts, especially when they're embedded and leave that embedded status. Twice in a row, I'll let somebody else do that. You're not trending anyways. You have a higher high and lower low. The bearish part of the component was lost today. That's the plain English that I'm giving you. In the cocoa market, still very much in the bear play. Hard to believe how much this market has come down, right? You know the commodity index has gotten itself beat up, but look where you're at. Still very hard. And when you come to the cotton market, you got the higher highs, the lower lows. Then we get to the cattle, the never-ending break. This is not a misquote. You were down another 450 points today. So yesterday, if we look at the market, you were down 300 points. That was limit. They expanded the limit today, and I think it can expand tomorrow. I'm not sure. You might want to check with your broker. You'd think I know that, but I don't know it. Lower highs, lower lows just running. This is a money play. And you broke out of this sideways action. I mean, remember we talk about this so often. You get into these sideways action plays, and I'm constantly telling you, this is like a pipe with a spring. And you're looking to see what happens. You get this big down, and this next day, in looking back, history, I didn't see it, that was the kiss of death, because now the market's going to start pushing on this. You don't know there's going to be a Tyson fire in Kansas. I don't. That plant, what does it do? 6% of the nation's beef on any given point in time. And then we're up here. This is Friday. We knew of the fire Friday. We didn't know the severity of the fire. This is what you walked into yesterday, and this is what you're walking into today. Where are you going to get those animals to other places? I did the mileage. It's pretty hard. Feeder cattle, down 675 points. These are big-time moves. And again, you've got people caught. Again, you came out of that sideways action. Trying to catch it, wouldn't even bother. Where are you going to put risk? You can fill gaps. You can go crazy in it. This is what you call a panic situation in my eyes. In the hog market, you have a market that's getting a bid partially because of maybe it got some good news out of China that the U.S. delayed some tariffs today. I don't know. Delaying tariffs isn't removing them. I'm not buying into all this. What President Trump did do today is he said he's looking for China to keep its word, and it's going to do large agriculture purchases. Code word, are they going to buy pork, a product that they really need from the U.S.? I don't know. I can tell you that while the swing line is up, the bias is down, and you're oversold. I have no idea what's going to happen there. But sometimes you look for seasonals in all the noise, and you get an idea as to what they may or may not offer. The one thing a seasonal doesn't do is it cannot guarantee the future, but it can tell you what the past was like. And I'm talking the way more research does it. They give you the past of the past 5 years, 15, and 30 years. And you get interactive charts to work with them. You can look at only bull years. You can look at previous bear years. Then they'll come out and give you, if you buy on this day and you get out on this day, the trade has worked, let's say, anywhere from 85% to 100% of the time. Remember what I just said, because I'm a guy full of Swiss cheese. You look for those 100% trades, and as soon as I get in it, it's no longer a 100% trade. You've been with me on that. You can laugh at it. You know how true it is. But where the importance comes in, it gives you an idea of what seasonality in a norm is. And I use the word norm because it breaks bear years and bull years apart, and it gives you an idea of what those are. You'll get commentary from them as well. We offer a 2-week free trial to it. How do you get it? It's simple. Call us, 866-973-2077. You can go to our website, www.iraepstein.com. You'll see our free offers. Take it from there. We're going to have a new look on our website. So when you get to it, you might have to look somewhere for our free offers. I'll give you an idea. Drop to the bottom right. I'm Ira Epstein.